Market observations for Cairns, Queensland. Now today's location has been suggested by you, one of our audience. So if you would like us to cover a particular suburb or a particular local government area or even a city or region in Australia, please mention it in the comments below. Let's create a discussion around it. We're each week recording different videos for different locations and very happy to take your user request, as has been the case here with Cairns. If you like what you hear, okay, we are all about first look research. Observations like this one about Cairns or different locations that are emerging or have maybe already peaked. 101 property insights, property investor strategies and case studies. Please, it'll be great to have you as a subscriber of this channel. So make sure to hit the subscribe button, make sure to hit the bell icon so you are notified and the first to hear of any of these new observations. And we would love it if you liked and shared this video with your friends. It would be much appreciated. I feel that there's a lot of value in these videos. For you as a property investor, it would be great if we shared the love and spread the word. Also, if you would like more information about the strategies that I've used as a property investor. So I bought my first investment property almost 20 years ago. So next year, it will be 20 years since I purchased my first investment property for $145,000. Lots changed in that time, a lot hasn't. If you would like to learn more about the strategies that I've employed, the mistakes I've made and how to avoid them, it would be great, or I encourage you to register and view our 25-minute explainer video, where we go into a lot of details around the 4 ways that I make money through property investment. You can see the link for that video and to register for it down below in the description of this video. So without further ado, let's jump into Cairns, Queensland, our market observations. So let's dive right in. As you know, property investment is a science. This is something that I do make a point of reiterating for each video. We have to consider property investment as a science. There's obviously elements of art, emotion comes into play. We're all humans. We all live in property for similar reasons, for shelter. But when we are looking at it as an investment, we have to treat it like a science. It has to be repeatable. It has to be something that we can learn and apply and then repeat consistently. That's why we treat it as such. This formula is what we look to at a macro level. Are we assessing this city or local government area as entering into the buying window, presenting good opportunity into the short to medium term? Okay, this is a formula we use. It's broken down into demand side drivers minus supply, new home construction equals the overall opportunity. That's the formula. I'm going to be introducing a couple of extra slides today. This is probably still only scratching the surface of some of the stuff we do here internally, but adding a couple of slides today to really build out some of these demand side drivers. So watch out for those. Let's dive in. Let's assess the market opportunity first, the region, the local government area of Cairns as a city, and then we can dive into, is it currently in the buying window? I might break that down to be a little bit clearer. Firstly, we need to assess, is there compelling opportunity in this area? And that gets you the where. Then once we've determined, yes, there is opportunity, the where is satisfied, we then need to determine, is this the right time to buy in this location? That gets us the when. And we have to be very fussy down to the day, the week, the month to get the optimum buying window into those locations. It's not enough to just go, Cairns looks great, it's got great opportunity, and you've just bought the top in Cairns from the market cycle. We have to get the where right, which is a local government area assessment, and then the when, which is a suburban street assessment. So with that in mind, let's determine, do we have opportunity in this location? I start off looking at employment. For me, obviously, income growth is important. Unemployment is important. But for me, the big ticket item is diversity. This has to be satisfied first before we move on. Is employment in the location diverse enough so that it doesn't pose us risks as an investor. That if one mine or one industry slows down, the whole region is impacted. I like to get diversity, and if preferable, I like to see number one as healthcare and services attached to healthcare. This is a big ticket item. This is led by federal government spending, state government spending. This is what drives people towards an area. When you have this sorted, you have a magnet that attracts people in the longer term to a location. When we see that this is a good employer in the region, it brings stability. It has a very firm backbone into a region. But it's still not more than 10 to 15% of all employment. So that does indicate, once again, we have a very diverse economy. If it was 60% healthcare as employment in the area, that obviously shows you we've got an over-reliance on that industry. This is a very diverse employment landscape, and our number one big ticket item is health. Very good. Accommodation and food services, also somewhat related to retail and trade. This is related to the tourism industry. This is obviously what we associate with Cairns and far north Queensland. We've got education and training, public administration and safety, once again government-led initiatives, so once again very firm backbone in employment there. And then construction is obviously coming along and is responsible in many cases for a lot of the developments which we'll be talking about in a moment. So that's once again very positive, very bullish, good strong backbone and demand side drivers in employment. Let's have a look here at the unemployment rate. For a key regional city of Australia, this is very reasonable and very low, and we can see that it has oscillated through COVID, but it has held up very well, and it's under the national average or around the national average for unemployment, which is very strong for a regional. Usually you see higher unemployment rates outside of the capitals. Very bullish, very stable employment landscape. Let's have a look here at population growth. It's not a large population growth centre. What I mean by that is it's not a focal point of population growth for Australia. You know, we've got 3 or 4% coming into some local government areas in Brisbane, as an example. We are hovering just over the 1% per annum mark currently in Cairns, and that has been the longer term average now for almost 10 years. That's not high population growth. Okay, but that is also, this is a secondary signal. It's not a primary signal. There could be far more people wanting to move to the area than are effectively doing it. So there could be, whilst 1% of people are successfully able to move to the area and live there, increasing the population, there might be 3 or 4 or 5% of people that are wanting to move to the area. That unmet demand is what drives price growth. Okay, so that's what we're going to be really focusing on. This is not really a strong signal one way or the other. You know, it's average population growth, very good for a regional centre, but it's not the full story. Let's dig into that in a moment. New projects coming through the pipeline. How does Cairns, compete at a national level? So we can see down here, these are the top 10 projects per capita or per project capitalisation spend in the region, in the area. We can see these plotted on a map here. They are focused in and around the Cairns area. This is 20 minutes south down here. This is 20 minutes north. Okay, so they all do have impact on that Cairns market. But the number one ticket item up here is a resort project that arguably does have a capitalisation of more than $2 billion, but it has been, almost a decade now in the planning, the approval pipeline. It's sitting there approved now with conditions, but we're not going down this construction path. It's still sitting there. I would actually, this is, not in the construction stages or anywhere near completion. I would actually scratch that from the list, all right? So what we're doing on this chart, we're listing the top 10 projects. We're totaling the total capitalisation of those projects, and then we are just simply dividing that capitalisation by the number of people that live in the area. That's giving us $18,000 per person in terms of new project spend, and then we compare that to different local government areas across the country to determine where that sits. And when you compare that across the country, it's very high, right? There's a lot of money being spent here per person. It's in the top 20% of all locations across the country. So for a key regional, that's really punching above the weight. Remember, sort of capitals typically have, larger infrastructure spends, etc. This is not the full story. You've got to remember this number one project up here is not, it hasn't begun. Okay, it might not ever happen. It's been now 7 years, 2015, where it's been talked about and under consideration, now approved with conditions, but it still hasn't started. Okay, it may never happen. We have to really question that. If you're going to pin your hopes on that, then you're probably too far out. If you then work down the list, you've got then, public spend, you've got transport, energy, transport once again, a lot of spending on improvements of the area. You've got university education spending here at 1, 2, 3. Department of Health, that's good, 70 million. Department of Health, once again, 70 million. None of these are, transport is a funny one. It really does, cause employment while it's being constructed, but that's short-term impact and it might dissipate once it's completed. The only real utility benefits of transport once completed are improved commute times and improved lifestyle factors. That's a softer measure. It doesn't have a direct relationship, or it's very hard to determine the relationship of that to property price growth or demand. Okay, so we don't, when we look at these things, it does improve the standing of the location, and over time it does, improve the perception of the area and attract people to the region. But it doesn't have the direct type of impact on employment, which creates extra demand from the moment that project is finished, like something like health or universities or hospitality. Okay, this project at the top here, if it was to go ahead, yes, a huge positive impact on the region. But the other ones, which are far more certain, less so. Okay, so we are a little bit distracted and deceived by this preliminary assessment of these projects. For me, a lot of people don't go past this type of analysis. You've seen people talking about Cairns and the region. Look at all these wonderful things. Let's question that, because we dig deeper into it and suddenly it doesn't look so crash hot. Okay, so new projects, I'm not convinced of the horizon of new projects in the pipeline. For me, that's definitely average at best nationally. Population versus supply, projected population growth, 1% per annum for the next 3 years. So total of 3%, 2022, 2023, 2024. Now, this is around the modelling that we've done. We've done a lot of pre and post population modelling outside of ABS data. We worked with Bernard Salt in this research going back over a year now. How is COVID impacting population growth on a local government area level across the country? We've recalculated our population forecast. This is internal data only, and this is now where the dust has settled. This is a Ripehouse approved projected population figure for this region, pre and post COVID. Okay, how does that equate to supply? We'll get to that in a moment. But in the past, has there been an under or oversupply when you look at the percentage of population versus the percentage of new supply? And we have had a shortage. Okay, so potentially there is more than 1% of people wanting to move to the area, but they just don't have the homes to move into. Okay, so this is a very positive signal. It means that we're not being swamped with supply. We can see here 2 years where we've had mass approvals, dramatic rafts of new addresses being created and constructions occurring in big clumps. And then it does return back into a nice, healthy market. So, that's once again at a high level, population versus supply, relatively positive. This is an average figure, 3% over the next 3 years. That's an average figure. It will be sensitive to new supply. If we did have another year like this, then it would just ruin, price growth for that period, and if not a year or two afterwards. So we have to be very sensitive to that as well. Let's dig down. Overall, opportunity, employment great, new projects only average, new supply and population, it is posing a risk. Overall, the opportunity, I would say, at a national level is not necessarily that bullish. All right, when you look at the whole country, there are far stronger opportunities when you take this type of assessment. From me, seeing the different locations day to day, doing this research day to day, in the weeds, I know of far more superior locations, even in far north Queensland, when compared to Cairns. All right, but let's continue down through this process. Let's analyze, are we in the buying window? All right, so the where is a maybe. The when, are we in the buying window? Let's assess that now. Let's start off with a secondary figure, days on market. It's not really a primary signal. Eric, the data scientist here, hasn't really seen a strong correlation between days on market and predictive future price performance or price growth. But it is good to, understand the market dynamic to a certain degree, and it is a familiar measure for most of us. Days on market, how long does it take for a property to be listed to go unconditional? Once again, we have a very tight market. We're seeing this in many markets in Australia at the moment, but 20 days is about as low as you can go. Extremely tight market. Let's determine if this is, causing your buying window to be open or already closed. Generally, when you see this type of heat in a market, I start going the other direction. I don't want to be competing in offer over offer scenarios. So this is the first flag. We are in a very heated and efficient market at the moment. Buyers are falling over themselves. It is a seller's market. High competition. We have been in a very high competition zone here now for the last 12 months. All right, this on a national level is very high consistently. In February, it has just stopped and dropped off a cliff. It's just really interesting, and it might warrant further investigation. It is a bearish signal, okay? It's a signal that the market has just topped, okay? That demand has just now satisfied supply, and then prices where they are has now exhausted people or people wanting to pay those prices. The market's taking a time to readjust and find itself. It's suggesting, breaking this down, how many listings in February sold in the first week, right? That's the whole idea. Now, there could be a few reasons why it has dropped so quickly, from almost 20% down to probably 5% here. I'm just estimating that. Why do you think, and it'd be great to jump into the comments below, why do you think, let's get some reasons going here, why do you think the number of properties selling in the first week has dramatically fallen through the floor in February? I'll give you a few moments to think, whack it in the comments, but my understanding here, and this is once again not confirmed, but I've seen instances of this in the past, is around you've had people holding off listing their property going into Christmas. Umming and ahhing, no honey, I haven't got it ready yet, let's not rush, let's put it in the market in January. So you might have a seasonal influx of properties hitting the market in late Jan, early Feb, okay, that's buying season. A lot of people also wait until after Australia Day. Let's get serious now about the year. Oh my goodness, the whole month of January is gone. What am I doing with my life? Let's now put the property on the market and move on. All right, so you generally do see February having a glut of listings. People have had slim pickings over December, and now suddenly there might be, two or a factor of 1.5, 2.5, 3 times more listings just hitting the market in that particular week. Suddenly people are now driving around open homes, I've got options, and they're not forced into that immediate, let's buy this first open, let's have an offer as we walk out the door to try and snag a deal. They can actually go and have a little bit of room to breathe. They don't have to make a decision instantly in the first week. They've got 1 or 2 or 3 weeks to make that decision. So we're not talking about a market that's really dissipated its heat. This is a little bit deceptive because we are only talking about properties that do sell in the first week, which means it has to be a very particular set of circumstances for that to occur. But that would be my reasoning. That would be at my level assessment of why that has dropped in February. Is it a signal to be concerned about? Maybe. Let's see how March performs. But if this continues, then you would say that the market has really slowed down due to potential of price pressure or price growth in recent times. So look, let's not be overly concerned about that in isolation. As I mentioned, if it does continue, something to be concerned about, but let's move on from there now. Stock inventory. We can see that stock has been decreasing consistently over the last 12 months. This is potentially the upswing that I'm seeing, and I would have expected it to see, so this is probably the jump here. I would have expected it to jump up probably more than this. My logic was correct we've got a glut of listings coming in through the new year period, you would expect the stock inventory to really jump up here, probably more so than this. This is probably not really suggesting that type of stock increase. And when you see the uptrend here in units as well, it's not like houses have just suddenly arrived in the market in any real volume. So there might be something else going on. Is it seasonal? Is it the flooding in Queensland that's impacting people putting their rental properties on the market? Is it these localised factors that are causing this? Is it cause for concern? No, not necessarily. Just because a property doesn't sell in the first week, isn't a strong signal one way or another. It's not necessarily caused by a large stock inventory, which would be bearish. It's quite a stable market. You've got a very tight stock supply and it's not starting to pop up or make any large radical moves. So once again, very tight, heated market with limited stock available for purchase. A bullish signal, a very tight market. Days of remaining supply, stable, if not slightly decreasing. For a regional, this is very low. This is demonstrating to you that properties that are coming up for sale are not necessarily being renewed as quickly as they're being purchased. This is a very tight market once again. This is the primary signal that I like to look at. The hottest markets in the country are running at about 50. Anything under 100 is still a very hot market. Okay, and then you're going up here to 150 to 200 days of remaining supply. That's starting to become a cool market. So we have to remind ourselves we are dealing with a very hot seller's market here. Offer over offer scenarios. Basically, this means how many properties are selling per day. If it's 5 properties selling per day in the Cairns area, and there is 100 properties available for purchase, you've got 100 divided by 5. You've got 20 days of supply available. Right, that's this formula. It's showing you if there was no more listings coming into the market, how long would it take for every property to be sold? And obviously, this is a factor of how long it takes the properties to sell, days on market, and how much stock is available for purchase. So when you start seeing this trending downwards, you start seeing that snake, that coil constricting, but has the market already started to run away from itself? All right, we know it's tight. Have we missed the buying window? This suggests that we have, all right, really quickly off the top of our head, asking prices are really starting to skyrocket and move, particularly over the last, 9 months. You can see here almost 12 months ago, it's gone from 450 median asking price up to 500,000, but the top end of the market has run away. Okay, this is a really bullish signal, positive sign that people have got money and are spending it in the area, and the top end of the market keeps running away. The median's not really moving, but the top end of market, there's a lot of money being spent in the Cairns area. That's a very bullish signal because you would expect the median to catch up with that over time. All right, it will pull it up. Let's just have a look quickly at, sorry, I've gone the wrong way. Are prices, so we've talked about asking prices, top end of the market moving. Are sales prices moving with it? For that, we have to look at the discounting rate of the market. The market is selling for more than the asking price. Okay, sales agents are not really knowing what's going on. Prices are now selling for 3% over asking prices. Generally, sales agents, nationally will price what they think the property will sell for, and then they negotiate from there. In this case, they really don't have much of an idea. It's selling for 3% more, which is quite substantial. It's definitely far more than the national average at the moment. So that does mean that the median sale price has started to really skyrocket. Okay, this is now all of the combination of these factors, the tightness of this market have really let it, the coiling up, it's between 2021 and 2022, it's really gone to the races. Okay, this is very strong price growth through 2021, very common across the country. Has it got any steam left in it? Right, let's summarize things. Overall opportunity, average. Okay, very tight market with some concerns there about immediate sales, but we don't need to worry, too much or focus too much on that. It's a very tight market and it's already grown. The coil has started to loosen and to evaporate. Okay, the pressure is starting to be released through price growth. It's already been occurring now for a good 12 months. Is it set to continue? Are we buying the top of this market or is it set to continue? Let's try and answer that question through the rental side of the equation. Rental analysis, this gives us an idea around, rental markets generally lead the buy side. If we can still see tightness here in the rental market, we potentially have got another 3 to 6 months of good growth in Cairns. On from that, I'm not seeing the deepness of this opportunity, but it might still have 3 to 6 months of good growth. It's probably not enough to justify our entry into the market. Okay, we want short and long-term growth, but this will tell us what the likelihood of price growth is for the next 3 to 6 months. Rental growth, very tight rental market, okay, and it is tightening further. Extreme tightness in the rental market on a national level. This is right at the top of the dial. Very bullish signal. Tight rental market. Rental listings, once again confirmed, dropping and consistently dropping now to a low point of rental listings. You can see the number of houses here available for rent. Remember, this is across the whole city. This is Hobart 2017, 2018 type numbers. There were two figures. Hobart's 200,000 people. Hobart had less than 100 houses in the whole city available for rent. Think about that for a moment. We're starting to see that here in Cairns. Extreme shortages of housing stock. And we're seeing this confirmed and reiterated in rents per week spiking. All right, look at it moving here. It's just continuing to push. This is dramatic, 475 to 550, almost to 575 in 12 months. 20% rental growth in 12 months. All right, that is, that's off the charts. We've seen extreme price growth, right? Extreme price growth in the last 12 months, matched by extreme weekly asking rent growth as well. So we are still seeing rents holding up very well. You've got this unmet demand pushing into the market. This is an extremely bullish figure, and it would suggest to me that the market does still have some steam left into it. Probably 3 to 6 months, not likely to be a huge amount longer. Cairns will fall back into the national average probably by end of 2022 into 2023. It's not potentially somewhere that I want more than 6 months worth of overperformance. I want longer than that. I'm just not seeing the depth of the opportunity there. That's once again confirmed. If we have prices growing and rents per weeks growing, yields have stabilised. Very high yields in Cairns. This is an extremely high yield, very good cash flow generally provided by investments. The one caveat here, check your insurances. Okay, you might pay $300,000 for a property, but your insurance premium will be $3,000 in the wrong location. There are some pockets which have more reasonable insurance premiums, some property types, but generally this is a gotcha. This is a catch-all for investors. All right, this is not to say the same is applied to even neighbouring areas. Is Townsville similar? Is down to the south the next stop, Rockhampton, down even into the Sunshine Coast? You've got independence markets in Australia pushing and pulling against each other. This is about finding short-term overperformance, mid-term overperformance, and long-term regression to the mean. I like to make my money up front, and then I can spend it how I choose, not wait in the market for it to come later down the track. If you would like more information, more of these types of videos, like and subscribe. So like the video, it would be much appreciated. Thank you very much for doing so. Subscribe to the video, clicking the button below, and make sure to hit the bell icon to be first in line to be informed of any new videos. If you would like to understand the 4 ways that I make money through property investment, I bought my first investment property in early 2000s, okay? I've made some mistakes along the way, but many of the lessons that I have learnt, sometimes the hard way, have really set Anna and I up for success. It's been a very positive experience, property investment. But there are 4 ways that are absolutely non-negotiable to make money from your investments. If you'd like to learn more about that, there's an explainer video, a link to that explainer video in the description below this video. Look forward to seeing you in the comments below. Let's get a discussion going. Let's start talking about this region. Have you recently purchased here? What are your thoughts about it? I'll be monitoring the comments very closely and engaging with you directly. Thank you very much for your time. Talk to you soon.